Hello, everyone. Warm welcome to everybody. We'll just wait for a few minutes for everyone to join. Welcome to everybody. We'll just wait. I think we'll start. A very good morning, good afternoon, good evening to all our valued customers joining us from across the globe and also from various parts of India. On behalf of Kotak Mahindra Bank, I extend a warm welcome to each one of you to Kotak Live, our customer engagement platform. And today's webinar topic is on opportunities in real estate investments in India for NRI customers. As you're aware, India continues to be one of the most promising real estate markets, offering a combination of strong growth potential, regulatory transparency, and attractive investment avenues, making it the right time for NRIs to invest. In today's webinar session, we shall be covering key insights on current growth of real estate trends in India, benefits to NRIs on investment in real estate, outlook for investment in commercial, residential, or REIT, and our experts' view on real estate opportunities in India. It is now my privilege to introduce our esteemed guest speaker for today, Ms. Nidhi Srivastava, founder and CEO of Gravity Properties, a Dubai-based international real estate investment platform catering to HNIs, family offices, and global investment. Nidhi brings it with her extensive 25 plus years of experience in real estate sector with deep expertise in creating structured high return opportunities in real estate across Dubai, India, and other global markets. She is honored with Women Leadership Award by Asia Leadership Forum and also received 1% Chairman's Club Awards by Danube Properties. She was also awarded amongst the top 10 CSOs in 2020, and she is amongst the top rising international real estate influencer of the year 2025 with fastest growing global audience. Not only this, she is also an author and got her book published with title The Global Intellectual Series, Diversity. It changes the perspective you see the world. Thank you, Nidhi, for taking the time to join us today and share your valuable perspective with our customers. We are truly delighted to have you with us. Just reminding, we also have a question and answer session towards the end. So we encourage all our participants to share their questions in the chat box. Without further delay, thank you all for joining and let's get started. Over to you, Nidhi.
Thank you, Rashmi. Such a great opportunity to be among people who are abroad and doing some marvelous work sitting in different countries. It's always a pleasure to be among the people. And it's such a great honor to be on this platform with Kotak Mahindra Bank. Thank you so much. I look forward for the session. So, not taking much time, I would love to connect now to the perspective of real estate in India and how India as a market is the fastest growing real estate market, and what are the series of changes which India has undergone to make this as a more legalized body than a very unstructured one. So, I'll just take you through this presentation, and I'm sure you would gain a lot of your insights. As Rashmi rightly said, I'm absolutely welcome. You're all absolutely welcome for all the questions there. Okay, so for many years, it's looked like investing in real estate in India had been a very emotional journey. However, today we look into the factual figures and research-based numbers as to why today the destination India has become the most favorite destination on real estate selling. Why today India as a market is a potential market for NRIs specifically. Of course, I mean, when I talk about real estate investments, about 80% of the investments are coming from people who are based out of India. But there is a overgrowing percentage of people who are, investing outside India. Why this has happened? Now, just to highlight a little on this aspect, we are talking about the world's third largest economy, which has some unprecedented growth patterns and some kind of growth investment plans. Let's look into why today India has become the most favorite destination. Number one is rapid urbanization. So we talk about urbanization now. India is a market where it has been decades when the population have increased. But with population increase, it has also brought in a lot of infrastructure expansions. If we look at the housing requirement according to the reports, it looked like that by 2050, the housing requirement is going to be close to about 144 million, which is going to be the housing requirement which is going to be coming in. Infrastructure in form of expressways, metros, airports have drastically grown. Now, talking about infrastructure, just to also give you certain figures, about 600 to 700 billion dollars in last 5 years has been spread across by different state, union, political authorities, in which about 600 to 700 million has been spent only on the infrastructure development when it comes to India. Again, not to forget the wealth creation model which India is now into. Some time back, India was known as Sone ki Chidiya. I think that entire span, that entire thing has come back, where today India is a booming middle class, high network individuals market. We have IT tech companies, we have founders, we have structured entrepreneurs which are coming up. Sometimes back, the entrepreneurs were in a ratio of about 30% to about 70% people who relied only on the service sector. But I wouldn't be surprised if I happen to quote at this moment that about 60% at this moment is the growth which entrepreneur market has seen. Of course, not to forget the latest technologies like AI and other things which have come into consideration. when it looks like any market grows when there is a global inflow of capital. I think we all know this very well, that there are certain companies like KKR, we have Brookfield. These companies have made drastic changes in the market of real estate in India, and they have given a lot of project funding to the Indian companies, thus keeping that kind of trust in Indian market. Now, let's also understand as to what exactly is happening in the NRI case. Why today NRI's most preferred asset class is now into the real estate. I mean, of course, there are so many weapons in which you can invest, but why real estate? So let's go back to the history. I think it goes without saying that it is the tangible asset, something which you can touch, feel, keep it for your generations, and hence most of the NRI are trusting in believing and preparing their asset base. So the first and the foremost reason is that it's a tangible asset. Currency hedging is something which is an truth which all of us know. The currency, what you earn across the borders, investing in India, you have more power of purchase rather than any person who's staying in India and purchasing. Hence, give you more opportunity of investing in luxury real estate. Not to forget the rental yield. It may be a moderate inflow of funds, which is like you have moderate returns, but are quite steady and very safe. So rental again becomes a very good market when it comes to investment. There are tools which I'm going to discuss further in this presentation. Tools like REIT, tools like investing in pre-leased commercial properties, which are extremely good investment opportunities for any NRI who is not wanting to have any kind of hassle-free, who's not wanting to have any kind of hassled investment. That is not too much of focus on maintenance and, what a very hassle-free investment. Of course, goes without saying, it is a very emotional connection. We all understand the fact that emotionally, somewhere or the other, the roots of people investing from NRI market is somewhere in India, and hence it also gives a legacy to the entire thing. It also gives a financial security when it talks about, I mean, when we talk about the family which is back in India, and hence all these factors in comparison to a lot of other market is one reason why NRI is again most preferred destination for purchase. Now, how does this entire scenario of investing in India work? I'm sure most of you who are sitting with me at this moment in the panel have undergone some kind of road shows. You've been interacting with a lot of real estate developers sitting over there at the NRI market back in India. But how does this really work? And why should an NRI really trust in this market? Because obviously, India comes out to be very challenging for certain people to understand. But at this moment, let me tell you and let me assure you that real estate in India has completely changed 360-degree from the year 2017. Why this has happened? We need to understand what was the doubt which we had in earlier real estate. The first and the foremost was lack of transparency. When you were bargaining with a developer, you never knew that this price is right or wrong. Second, you had chronic project delays, which means that when the developer said that the project is delayed by certain years, you do not knew that time what could be the possible time in which you will get the project. And if that amount was more taken over some kind of a opportunity which you have foregone, you of course had the interest cost of net present value. Legal ambiguity has always been there, whether the title was right, the title was wrong, whether it was a leased out property, whether it has some kind of ownerships, any kind of disputes. And then, of course, it was, we had even the investor problem. Suppose if the project is delayed, if the project has not come out as per the compliances, as per the promised, specification, there was always a problem as to how the investors would be addressed and whether there will be a compensation or not. In the year 2017 was a revolution for real estate. I understand that most of you do understand why this was a revolution. Of course, this act like RERA, Real Estate Regulation Act, was introduced in 2017, and that was an epic because this particular act legalized the entire system of real estate working in India. Though many countries follow RERA, but specifically in India, today there is a lot of stringency over developers to protect the interest of customers in terms of handover, in terms of checking the status, in terms of where the money is going. Today, the money which is coming through an escrow account, it has to be kept only and only for the construction finance, and part of it is only allowed for a developer to be used for other purposes, which also gives an assurance that the pre-sale happens. RERA also ensured the right specification to be given to the customers, and there has to be no false display. The possession dates were known. If there is a delay, there is an average percentage of bank interest needs to be returned back per year on an annual basis as a compensation by the developer. So this particular RERA Act was revolutionized in the year 2017. Along with that, simplification of the taxation by GST. The introduction of GST was also done in year 2017, where the entire setup, the entire framework of multiple layers of taxation were removed, and there was just one taxation which was levied, which was GST. Consolidation of developers happened, which was extremely important, which means what? Earlier than 2017, there were so many different developers which were there in hook and corner. Any person who had the funding would become a developer without having an expertise. But RERA again ensured that the stringency on the developer before taking the approvals is so much that only a developer which has a background and experience can survive the rigor of procuring a RERA certification, because of which a lot of small developers consolidated into the bigger developers. And very, very important thing is that institutional funding started. Because of this entire setup of an environment which was more secure, there were institutions like KKR, ASK Capital, ICICI Ventures, so many other, private funding institution evolved for giving funding to the project, and hence the project also became secure, and these funding company also had accountability and control, both the aspects. They had accountability and control over the project, which also made in other respect the security for our customers. Going ahead, let's talk about a little on the infrastructure as to why do you think and how and what way you should invest. A lot of people sitting abroad are confused as to what to do. I mean, there are so many projects, about 1.4 lakh projects since the time of RERA has been approved. As of now, when we are sitting, we have more than 1.4 lakh projects under construction which got RERA approval. Now, how do you identify basis the entire expectation of an investor as to what is a good project and how one has to proceed for it? Let's look at from an infrastructure side. Now, there are 3 to 4 very critical aspects in which an investor should analyze before investing. Uh, Expressways, which are coming again, is a revolution for India, because I think this has basically connected a lot of cities and probably the transportation. And expressway again has become one of the very defining reason why the location matters a lot. We've also realized on the metro connectivity. Now there are 20 lines. If I only talk about Bombay today, there are more than 20-25 lines which are running across the city. And of course, the metro again becomes a very critical aspect when you have to invest something in like a commercial property. Airports. Now, multiple airports have emerged basis. If you talk about the larger cities like Bombay only had one airport, and now there is a Navi Mumbai airport, which is again coming up. Similar is the case with so many other bigger cities, and airport again becomes the primary reason for a property appreciation. So this, express, metros, airport, typically we see around 30 to 40% higher appreciation in comparison to other places where you are going to invest. So infrastructure development of India also led to a surge of 40 to 50% of the investment growth. Now, where are these investment happening? Typically, if you look at those three aspects from which I was talking about, this three aspect come only in the top tier cities in case if you want to invest. So let's understand the DNA of these cities as to how an investor decide. If an investor is very neutral and does not probably only want to go on an emotional value as to what stands for, which are the places where these investment happens. Now, if you look at Bombay, Bombay is a very high capital extensive investment. However, it is also a city which in a longer run gives you a very, very high EBITDA on return. So you invest high, but you also earn high in terms of the ROI. Bangalore again becomes a very particular market where we see a surge of IT hubs, IT professionals. The rental income extremely good on in Bangalore because of the kind of service population growing. Pune again is a market where you can invest if you're looking for a moderate level of investment and not very high, still dominated with service sector, gives you a marginal level of ROI. Hyderabad again is the most favorite destination for all the NRIs because of the fastest corridor of IT and government support and the affordability which it brings into. Hyderabad also is very particular because the upsurge of real estate which has come up, that upsurge of real estate has only come up in last 10 years. And hence the curve of growth is very high in Hyderabad. So people who are looking for Hyderabad, they should look for ROI, lesser investment value, and higher returns, even returns on selling of the property. Gurgaon again remains a very favorite place for most of the people who are mid-range, moderate to high level. You need a high level investment. At the same time, it is a very, I would say it's not a fluctuating market. It's a very, it's a very stable market to invest in. Let's go to the investment strategy as to how you decide upon approaches in which you have to. So, what money to put in? Should we invest in luxury? Is luxury going to give us more appreciation over the emerging corridors? Now, we have to understand two things. In India, there are two kind of demand curves which we are analyzing. One is ultra luxury properties, and the second one is emerging growth corridors. Now, if you are a long-term investor, you may go something like a emerging growth corridors, which gives you a more affordable entry point. It may give you appreciation, maybe not faster, maybe not slower, but it has quite a moderate level of appreciation. But in a longer run, it will give you more higher rental yield. On a luxury front at this moment, people who are willing to enter this particular market into an ultra luxury property base. Now, those are the value based proposition at a very, very different level because most of the game is a long term appreciation models. Those are obviously the rental income may come to 3 to 4% in a longer run. We are looking at premium properties with a lot of concentration over value based housing. So it comes to somebody who's looking for that can look for an ultra luxury properties also, particularly in Bombay and Gurgaon. Let's understand now the NRI advantage, the unique advantage which an NRI earns over purchasing a property. As I've already discussed in my earlier section, first is the purchasing power. Foreign currency is 3 to 4 times, has a more buying capacity than an Indian currency. So, you have a higher purchasing power. Second is you're looking for an effective model where, as an NRI, you have more efficiency of earning. So about 60% more efficiency in your money to probably earn more returns. And we're looking for an average investment in India, which is more, I mean, if you look at the Indian market, it is more affordable. If you look at, if you look at an Indian model, it is more affordable than buying a property in any of the locations abroad. How do you check as to what are the critical factors in which you check as to which developer is doing well and probably which developer is good? The first and the foremost thing, especially for all NRIs I'm talking about, it's maybe for all the general people, it is true that you probably can rely on any developer who you are looking, because you have a flexibility of going, checking credibility. Construction is going in front of you. But when it comes to NRI, the first and the foremost thing which you have to keep in mind is, number one, the credibility of the developer. The developer needs to have a very, very stable financial background. RERA registration needs to be checked. The simple process of checking the RERA registration is going on the website, putting the name of the project or the RERA number, and checking exactly the construction status as well as the funding status. You also need to check from a developer perspective the earlier projects which has been made. I think that is something which all of us are doing. But for NRIs particularly, you only have to check the developer's credibility. RERA compliances have been saying many a times. RERA compliances are extremely important. Whatever has been written in the collaterals needs to be checked with RERA website, whether it is a carpet area, whether it is account, which is the escrow account, registration number. It is readily available on the RERA website. Kindly do make a check before purchasing any property on the RERA website, whether the material which has been given to you is absolutely in sync with the RERA disclosures. Title clarity, of course, happens via the RERA. However, you also can very well go on the RERA website and also check if there is any litigation which is on the plot of land or not. So RERA again stands very important over here. While purchasing, you should be extremely clear about why you are purchasing this property. Whether this property over here is for the need of a rental appreciation, you're looking for a long-term investment, or is there any other purpose? Because you also need to be extremely sure about whether to get the money back to your country or whether you want to retain the money in the country, because there are linked taxation and FEMA regulations to it. Again, not to talk about the liquidity aspect. Of course, since real estate is a market where entry and exit both needs to be decided, you also need to select a destination where you have enough of mean to liquidate your asset through some broker or maybe through institutions. Let's go in more deep as to what exactly are the instruments of investment. I think most of you traditionally have only seen two kind of sectors in which you've been investing. But many of you who may not know the three, there are not two instruments of investing, there are three instruments of investing in India. The one, before I go through all these four instruments, I would first broadly want to tell you. Number one is the residential, which is just purchasing of the house. You have commercial. Commercial can be a pre-leased asset, or can be something like a pure under construction commercial property. And the third and the very important one, which is emerging in India, is REIT, which is Real Estate Investment Trust. And the whole concept of REIT is based on the stock, which I'm going to kind of discuss with you a little later in this presentation. So the four major trends shaping the next decade of investment is, number one, luxury housing is on a boom in India. So if you're looking at buying a property, please understand that luxury is something which all of us have understood after COVID. And after COVID, when I talk about luxury, the definition of luxury is not about only a location aspect, it is also about spaces. It is also about the larger houses which people are wanting to rent out today. It is about the location, accessibility to, again, the infrastructure. Luxury housing, again, is on the boom. When I talk about luxury housing, I would not also stop making a point over here, even the second homes for that matter. When it comes to some destinations like Goa or maybe, some other Pondicherry, these are also looked upon as ROI based destination. You also have branded residences. Thanks to the government policies, the brands have entered India. So you today can see a lot of FTB residences and a lot of other brands which have entered into market. The benefit of this branded residence is that you get a better managed ROI. You get better management. Some of the apartments are managed by these brands. So look for something like branded apartments when it comes to, especially the places like Delhi and Gurgaon. Institutional investment, as I've always told you, something like REIT, private equity, pension funds allocating capital to Indian real estate. I think these are extremely important institutions which you have to look into as to if the project has been funded by private equity or probably some instrument like REIT is a possibility. And of course, as I said, the REIT, which is Real Estate Investment Trust, is extremely beneficial instrument at this moment for NRIs to invest. Going forward, I think by now you must be surprised as to, I mean, of course, you've decided to invest, but how to invest, what to invest, and where to invest. So, for these questions to answer, we will go very simply into comparison about how to invest, where to invest, and what are the different instruments in which today it looks like. Before I go to a comparison of the three basic structures of investment, I would, for all my audiences who do not understand REIT well, because this will be immaterial to have a further conversation till the time I make you understand what is REIT. Okay,
Very,
so
very
real
important,
estate.
Nidhi. I think that will be very good.
Absolutely. So REIT again is a big milestone in India, which has happened in form of real estate investment trust. What is REIT today? Now, REIT, I mean, just to simply put across, is nothing but it is just a mutual fund in the layman's language in the real estate. However, that's a very literal definition. Let me come to what is a REIT. REIT is a income generating tool in which plenty of investors in very small segment as low as about 10,000 rupees are investing in a pool, and that pool again is getting invested in the commercial assets. What are the institutions who are doing that, and who are the institutions like you have Brookfield, you have Mindspace. These are certain companies who are already into the REIT, a very, very trusted investment because this is approved by the government. How it happens is you prepare a pool, that entire institution invests in some kind of a real estate. 90% of the profitability is given to the investors. You own a share of office parks, malls, or warehouses. So, not directly, but indirectly, you are the owners of this particular in the unit and denominations of the units which you have purchased. So this is like an investors pool. It is absolutely managed by asset managers who are constantly working on the investor base as to what are the real estate assets needs to be purchased, how they are going to be managed, how the real estate these tools are going to give you a great investment opportunity, and then how the income will be distributed in the segment. Further, what is the benefit of investment in REITs? It is a low entry point. As I told you, it is as low as 9,000 to 10,000 rupees onwards. You have regular income. Generally, it is quarterly income, about 6 to 8%. Liquidity is almost like a share market. When anytime which you want to kind of liquidate, it's absolutely listed on the stock exchange. So you can just liquidate and as and when you want to. There is a zero management. There is nothing like a AMC fees. It is a diversified portfolio. You can have multiple portfolio in your in your bucket. You can probably apply with multiple asset. Of course, it is regulated by SEBI, which is that then it makes it more transparent in that particular sense. If you are a person, let's understand the risk. If you're a person who is living far, of course, market is volatile. It works like almost like a share market. There may be a little bit of impact on the interest rate, and maybe your rentals may fluctuate. There is an upside and there is a downside also. So these are the only limited risk which is attached with a REIT investment. And hence now, once we have understood REIT, let's further go beyond as to three important asset type as to how they actually transformed India's journey. Let's understand. The first and the foremost is the residential real estate development, because that's exactly what we have been doing since ages. Then is the commercial, and then is the REIT. Let's understand on a broader manner as to how three of them again are different. The first and the foremost is the investment size. When it comes to residential, you can start with something like a 50 lakh to about 5, 10, 15, 20, and sky is the limit. Commercial real estate again is divided into two parts. You have the commercial, normal commercial real estate, and you have a pre-leased commercial asset. Of course, the investment in India on the commercial side, especially in the metropolitan city, are extremely high. I've written over here 1 crore, but at this point, if you ask me, it is not 1 crore. It is beyond 1 crore. It is around 3 crore, 4 crore, 5 crore. But obviously, in a longer run, it is an asset for you. REIT is the lowest form of investment in the real estate, which starts from 10K. Entry barriers maybe moderate because you just have to select the property. You need to have the right person. Commercial, it is a very conscious decision that you need to know as to where you're investing because it's a high yielding asset. REIT, since the liquidity is very high, it is a very low entry barrier. We look at the rental yield. The rental residential yield is around 2 to 4% when it comes to residential, on a higher side 4%, but otherwise 2% to 3%. Commercial would start any commercial which is not giving you up till 6%. It's a loss making proposition because there are a lot of other costs also involved in. So from a gross basis, you should look for something like a 6%, can go up till 9%. REIT again on an average is designed in such a manner that the dividend which are given to you is in form of 6 to 8%. Capital appreciation, residential would take some time because of the ample amount of supply in the market. Commercial is quite moderate. It all depends upon the infrastructure development and how probably the cycle of appreciation goes. REIT completely market linked. That is the NAV growth. Liquidity, if you look at, of course, residential is low in terms of the demand and supply curve. The area has to go up, the location has to go up, the investment should make sense. The developer might have to exit only, then it can probably make sense. Commercial, if you ask me, of course, very low because commercial are, again, the entry point are very high. REIT, probably anytime you can exit. Management efforts, of course, there has to be a management company. Commercial, you need to, it's a moderate because generally it is a long-term lease. And REIT, if you ask me, at this moment, nothing. Risk level, we look at a medium risk level when it comes to residential. Commercial, it is medium to high. REIT, again, it is low to medium because you are investing in fractions. When it looks for diversification, we're talking about the single asset. We're looking at in commercial, we are looking to invest in again single or maybe limited assets. But when it comes to REIT, we're looking at multiple units can be purchased like a stock market. Taxation for NRIs, if you look at from a taxation perspective, we have the rental which is taxed plus the TDS which is there. Then again we have the similar thing in commercial, but in REIT again the dividend plus the capital gain are taxed. Currency hedging, I would say almost in both the cases, residential and commercial, it is the same. But REIT, it is moderate because it is linked to the market. Financial options, at this moment, residential offers a whole plethora of home loan. I'm sure Rashmi would be able to comment on this very well. But of course, there are all top banks gives you the best of the home loan facilities and a lot of schemes to enter. Of course, in commercial, there are certain percentages which are fixed, but REIT, at this moment, there is no funding which are possible. Let's understand the investor profile. Who is the right person to invest and how you should define yourself if you are meant for which kind of instrument. The first is a long-term wealth and the emotional ownership. If you're looking for something like that you need to have like a wealth, you need to have generation passed on, residential is the best. You're looking for only an ROI based investment and you want to have a good amount of investment, commercial is the best. If you're looking for something like a passive income, ROI based, if as an NRI you're a first time investor or you're wanting to invest in some other city, you're living in some other city, you can start with something like only a REIT investment, which is going to be more stable for you. So this is how we define the three different segments: residential, commercial, and REIT. Many of you have always asked me whenever I've traveled abroad on, aspect of how taxation work. Of course, I'm not a taxation expert at this moment. I'm a real estate expert, but of course, these are some of the basic thing which I think as an NRI you should know as to how the taxation really works. One is look at let's understand from the rental income. Now, many of the time this question comes up as to, is our rental income taxed? Yes, very much taxed at about 30%. Again, the rate applies. The rental income has a taxation implication. What's the short term and the long term capital gain? Anything which is within the 2 years is considered to be the short term capital gain. Anything which is beyond 2 years is supposed to be the long term capital gain. When you're selling the property and you are doing it as a short term capital gain, um, the income tax is according to the income tax applicable slabs only. But the long term capital gain, which is beyond 2 years, have about 20% with indexation and 12.2% without indexation taxation, which is applicable. Of course, the TDS, which is applicable on the sale, is also there. Next comes the TDS, which is there. So, of course, it's about 20 to 30% TDS deductions, which comes up, which can always be claimed later on. Uh, Repatriate the funds. Of course, most of you just want to know whether can we transfer the funds. Yes, up till 1 million USD is something which is quite possible, but you need to study the taxation acts like 15CA. You need to have those forms 15CA and CB, and as per the tax compliances. Exemptions, which I'm going to cover later on. Exemptions are possible under, this is over your capital gain. Exemptions is possible under the section 54 EC. 54 EC stands for the stock options available with the government, in which you have to invest your amount, lock your amount for about 5 years with government stocks and bonds. And section 54 is reinvestment into the property within 2 years. Double tax avoidance act, which is there, is basically that if you're, again, this is a very very important act which you should definitely discuss with your chartered accountant. In case if you have paid certain tax in India, especially countries like USA, UK, UAE, and Canada, you get under the double taxation policy, you can get some kind of a refund or relaxation, which you should definitely consult with your chartered accountant. So it looks like India is an opportunity and we should not shy away from this opportunity. Of course, there are a lot of consideration which we should always make. But India always comes out to be a great opportunity. India has changed now. India is a growing market of investment. Um, Still, there are certain laws which does not allow you to invest in India, which is that NRI cannot invest in any of the land opportunity in India. There are a lot of, in comparison to other countries, there are a lot of restriction, and we are privileged to be Indians who can actually invest in India over the residential. However, there are a lot of expats who still cannot invest in India. So I would definitely urge you, to think over your decisions over property buying. That India is a great market on investment. Thank you, Rashmi. Over to you.
Yeah, thank you so much, Nidhi, for so much insight on real estate. Uh, I think the way you have explained in detail the taxation, the way you have bifurcated into REIT, commercial and residential, that is really really giving a clear indication to our customers also. So I think now let's move to our interactive part of the session, Nidhi.
Sure.
So we are already receiving some good questions from our audience, and let's try to address them whatever maximum possible considering the time constraint.
Sure.
One thing I just wanted to elaborate that the part which you covered, that when a residential property is sold,
Mhm.
how this actually impacts the customers in terms of taxation. So just wanted to elaborate that if whatever capital gains have happened, if we invest in a new property, either 1 year prior or after 2 years, then completely that amount of capital gain gets exempted fully, apart from the
Absolutely.
capital bond that you have covered. Yeah.
Absolutely. Absolutely. Absolutely.
Yeah.
300%.
Yes. Now some questions, Nidhi. So one question is that can NRI customers buy agricultural land in India?
Well, as I've kind of mentioned in one word, and thanks for that question, Rashmi. No, unfortunately, and NRI cannot invest in any of the agriculture, farmhouse, or plantation property so far in India. There are two exceptions to it. One, if he's already holding a farmland, he can continue to be the owner of the farmland. Or probably, if the land is getting transferred via any of the gifts from any of the ancestral property, that is also permitted. But other than that, he cannot do any kind of a fresh purchase on agriculture, farmhouse, or plantation property.
Okay, okay, great. Thank you. Then some question is on how easy it is to invest in real estate and also liquidate.
Yeah, I mean, this is really, really important because you know what happens is, well, there is the entire trajectory of, rather, Rashmi, to answer this question, I would rather give a complete trajectory as to how an NRI should invest. And very quickly, I mean, let me say that this is like a life cycle of how an NRI should invest in real estate properties in India. The first and the foremost thing is that he need to decide that he needs to purchase a property in India. That's the first step, because when you decide is when you research, so you need to have a good research. Second thing is he need to have clarity about his NRE and a NRO account as to how the investment would happen from a foreign country to an Indian by getting in touch with the bankers. That's the second way. That's the second important step of making sure that the investment is happening. Generally, I mean, probably Rashmi, you're a better person to say, but I think the NRE account is generally the account where the investment should happen and the rental should be in the NRO account. But again, that's the bank domain. The third step is that the person should know very well, according to the government of India, what is the FEMA regulation and what is the Taxation Act. Again, can be done very well with any of the chartered accountant who is handling the NRI market. Very easy. I think FEMA regulation is only about where the fund is coming and where the fund is going. That's all the FEMA is in short. So the entire trajectory of where the funds are rotating is something which should be known. Taxation is very simple, that there is, whenever you're getting the money over here, there's no taxation. Whenever you kind of getting the money out, there is a taxation implication. So that also can be discussed with the channel part, with the chartered accountant. Second comes the next step comes is selection of the property, which is again very important, because there the decision comes about whether you want to have a commercial property, you want to have a residential property, you want to have a REIT, you want to go for which city, whether it is Bombay, Pune, or maybe a top tier city, or maybe a different city into consideration. And once you decide upon that, once you decide the property, it is about giving the token, getting yourself registered. And here comes a very important, perspective, which is power of attorney, which is a POA. In most of the cases, there are two ways in which you can handle the lifespan of when you've invested in a under construction property. One is that either you can have a POA, very simple process. I think most of the NRIs know the POA, the process. But just for the people who do not know the POA process, it is you just have to have one document, legal document printed in India, get that signed across, get it attested in any of the embassy office, and then execute a normal POA. Either you can yourself do a registration, or you can give your power of attorney to somebody who can do on your behalf. And the last portion is to take the possession and make sure that your property is according to the compliances and the promised structure. But I would still add two more steps in the last. One is that in case if you have invested for a rental purpose, that you're looking for a commercial property in a pre-lease property, please be very sure that you have right person to provide you with the maintenance and the rental assistance. And finally, the exit. So this is the entry perspective. Exit, again, as I told you, that there are lot of people who can probably give you a professional exit from the property. Of course, goes without saying a person really can do themselves. But however, there are professionals who can help you organize this very well to give you the maximum ROI. I think the profession of broking in India, thankfully, has really evolved now, and hence, it's quite simple. Yes, Rashmi. Sorry, I think you're on a mute.
My bad. Sorry. Thank you, Nidhi. One tricky question is for investment in Goa, what are the precautions that need to be kept in mind? Is there any restriction or something? Nidhi, now you're on mute, I guess.
Sorry. I think this is a fantastic question because I think there are a lot of people who have come to me asking for a perspective of how Goa can be a fantastic destination. Yes, I mean, for my all people who are sitting with me at this moment, Goa is a fantastic location for investment at this moment because in terms of the second home, in terms of the service, which is Airbnb and other hotel apartments, it's giving an ROI between 6 to 7%, which is the highest in India today. And the precautions which you have to keep. Sometime back, it was really difficult, honestly speaking, to have a property in Goa. But now, over a span of time, this is quite possible. And the way in which we can do this is number one, you need to be very sure about the title because there is a criticality over the purchase of property in Goa on the title because they had earlier a lot of complication over the ownership rules. That's so you need to be very sure about the title. You need to be extremely, the second point is you need to be extremely sure about going with a branded developer because only they have created an infrastructure where they have coordinated with the local agencies. You need to be extremely be conversant with the the land rules, which is the land permissions, which is the sea permission, which is there, the minimum density which is required, and which is known as a coastal regulation zone, basically CRZ. You need to have an approval of the local authorities. You need to know about a little on the taxation purpose if there is any local taxation which is levied. Need to have a right property management consultant because ultimately you're purchasing for an Airbnb, and hence you need to have a proper person who can manage the property. Local sentiments, again, as I've already told you, local sentiments are extremely important. And then finally, an overall hygiene check or an investment check whether the property which you're purchasing would give you a right ROI or not. So these are some of the aspects, Rashmi, which one has to consider.
Yeah. Thank you so much, Nidhi. Okay. One question is on what are the investment opportunities in tier 1, tier 2, or tier 3? Where should we actually invest?
Wow,
That
this
is
is like
somebody
a
asked.
very broad. This is like a very broad question. Of course, I would not be able to tell you at this moment where to invest because I think I would require like a personal session with you sitting here as to where to invest basis your requirements and all of it. But yeah, I mean, I can broadly give you a guideline as to how to invest, what to be looked upon in case if you're investing. So the first and the foremost thing is that if you kind of investing in tier one, you need to understand that you kind of locking already the opportunity which has been determined. That is, those rules, regulations, infrastructures have been signed, and that is the cost what you are paying at this moment to invest because the entry point is very high. Vis-a-vis, when you go to tier 2 cities, the infrastructure is at this moment going. So you are a part of the growth journey which is getting written at this moment. And probably your investment, especially if you are investing in commercial, I would suggest you to invest in any of the tier 1 cities. Residentials can be open for tier 2 cities and tier 1 cities as well. The returns on the sale of property can be higher in tier 2 cities, but the return on investment can be higher in the tier 1 cities. So maybe that defines a little broader aspect as to where to invest, Rashmi, and where to not.
Okay, okay. Yeah. One question is, what is the best real estate investment for NRIs? Is it residential or commercial? Please
Right.
suggest an option with low overhead of maintenance and administration.
Wow. So I think, I mean, if you look at the second part of your question, I would answer it not, it is not residential, it is not commercial. You can go in some instrument like REIT, because the moment you said that low maintenance, I think if you've seen the presentation also, which I've covered already, the moment you said the low maintenance, I think if you want a very hassle-free life where you don't want to be dependent on uh, much of very human intervention to manage your property, and you want to institutionalize your investment, the first and the foremost is REIT. You can enter into anytime, you can exit into anytime, only when you do not have an emotional value with that kind of an investment. The second investment which I would propose is a pre-lease property. Rather than investing in a commercial and then sitting across abroad and then figuring out as to where exactly you should invest, better take a pre-lease property. Most of the commercial developers today offer one or two project which is pre-lease property. In pre-lease property, you are very sure that it is for a longer duration pre-lease signed. Maybe something like financial institution, banks, ATMs, all of these people have minimum contract of 5 to 10 years. You are peace of mind because all the paperwork is complete. You know when is the appreciation of your rentals. These are the two instruments if you want a management free life. But on the other hand, if you're looking for some kind of a value connected from a perspective of owning that property, keeping it for a longer time for your people, for a lot of other people in your family, then it is the residential. So take a wise call according to what exactly I've kind of observed. I mean, just 2 minutes very quickly I'll take. I've kind of observed this specifically that many a time people say that we want to be associated with the property, we want to keep it for our people, we want it to be near our guys. I think in that particular case, just close your eyes and just do a residential this thing. But you want to be in the longer vision and newer instruments of how India is evolving in the real estate, go for something like a REIT.
Okay.
Right.
Yeah. So also, just one sec, Didi.
Yeah, sure.
Yeah, somebody has asked, what is the opportunity in second home in India from ROI perspective?
Oh, like I said, now this is one evolution again which has come up. Earlier it wasn't there, but now second homes have been looked upon because people have understood the work-life balance. And trust me or not, on an average, out of 365 days, at least an average person now, you will appreciate the fact, is almost about 60 to 70 days a person is out with the family on the second homes. So honestly, looking at some aspects, some destinations like Alibag, looking at some places like Goa, Pondicherry, Kochi, these have become a destination for the second homes now, who are on an average giving a yield of about 6 to 7%, which is very comparable to something like Dubai or many other places like Phuket, which promise that kind of an average yield. These investments are made on the luxury side. But remember, for investing these instruments, you need a good amount of capital in hand and you need to have a service operator, which means that you cannot operate without having a service operator. So any person who is willing to enter into such second homes should give equal weightage to both aspects. One is procuring a house, and 50% is who is going to be managing the house. So if your two instruments are balanced, you can very much enter into something like a second home. But as I always tell my investors who invest with me is whenever you invest in a property and you have no plans to come back to India, please make sure that you also define your exit very well.
Yeah, really. So that's really, really very clear, Nidhi. Some questions have also come with regard to um, tax exemptions. So I think we've already
Sure.
covered that.
Yeah.
Yeah. Some questions around. I am from Bombay. Some information of that city will be good to know.
Yeah. So, of course, I think Bombay is in a boom. I think let's understand Bombay from all perspective. I think Mumbai as a market has a lot to offer now to investors. At one side, there is a coastal line. On the second side, there is an airport which is coming up over here. At other part, there is an opportunity of commercials which are happening at BKC and Central. There is also evolution of luxury real estate, and when I say luxury real estate, sorry, but I'm calling about luxury, uber luxury real estate. So how do we define it into the ticket segment? Is any person who is looking at somewhere around 20,000 to about 40,000 per square feet price, probably can view something like Navi Mumbai, Thane, and maybe the western suburbs where the average is according to 20,000 to 50,000 per square feet price. Somebody who is looking for a luxury between 50,000 to about 1 lakh per square feet, but uber luxury living, uber luxury rentals and celebrity market can look into something like South Bombay, which is again a fantastic place to live in. Some infrastructure development supports Bombay really, really well. And, to say a few, I've kind of already talked about it, but, just to name few, is Coastal Line, which is coming up. You have Trans Harbour Link, which is MTHL, and then you have Mumbai Airport, which is coming up. Now, these three aspects are extremely high in terms of infrastructure development. We also have 20 plus metro line planned in the city. So any person who is wanting to purchase a commercial should also, be very focused at purchasing something which is very near to the metro lines. So Bombay is huge and it offers opportunity in every direction. I think it's a saying, when people say in Bombay, everything sells. So yes, I mean, the investors have really seen that kind of appreciation up till 5-10% very easily, and it's a booming market.
Yeah. So really nice to hear all these insights from you, Nidhi. I think a lot of questions we have covered. I don't know. I think you have covered almost every aspect of real estate, whether to invest in REIT, to invest in residential, commercial, I think, and also what are the benefits. So a very, very detailed session, Nidhi. Thank you so much for your time and the perspectives which we have shared with our customers. We are really, really thankful to you. I think,
Uh,
yeah.
Yeah, thank you, Rashmi. Thank you. I mean, I'm extremely humbled, and thanks for this opportunity. And I wish all the very best to all my customers here and all my people who have kind of taken out time. Thanks a ton for Kotak Mahindra Bank. I think you guys are doing an excellent job of connecting over boundaries, and thank you for this opportunity.
Yeah, thank you so much. Thank you once again to all our customers who have joined from across the globe and also from India. So we end up this session. Thank you, everybody.